First things first, a quick mic check. Mic's been irregular lately. Just give me a mic check. Make sure that I'm not running too hot. This is episode number 2002. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. It is Thursday, the 27th, and this morning we got a couple of really important numbers out of Germany. GfK consumer confidence came in at -7, missing its forecast at -3. The prior is -8.6. Durable goods came out at 7:30 Central, 8:30 Eastern. At -1.3, expected at 0.7. 0.7. Durable goods orders not running so hot. Initial claims starting to move towards levels that are pre-pandemic almost. Initial claims came in at 406, much better than the 425,000 expected, and GDP price index came in at 4.3 versus 4.1. GDP growth rate Q on Q. Second estimate for Q1 is 6.4, in line, so pretty decent. We still have pending home sales at 10 Eastern, expecting 2% pending home sales year on year for April. 35%. 35%. That's a lot. Mic's a little hot and it's fading in and out. Okay, good feedback. Thank you. Not sure what's up with this fancy headset. It's not, definitely not, I'm not impressed. Not impressed. So let's turn this off and let's adjust. Yep, let's adjust it. Boom. That should have turned it off, and coming up a little louder. Test 1, 2, 3. Here we go. So should be better. Should be a little bit better now. Volume is low. Yes, I can see that. Very cool. Should be a bit better now. Okay, thanks, guys. Should be coming in loud and clear now. Sorry about that. This is a distraction, this issue. Anyway, let's move into our Convergent Trading pre-market summary sheet. The market posture really overall pretty neutral. The market is showing mixed signs. We're still trading in the same area we've been in for the last couple of days. The Russell, again, the leader. Same thing as last time. The Russell yesterday, I think, was up about 8 points maybe and was leading the pack. Today, up 13 points. Small caps leading the market. Trading at 2260.2, up 0.58%. The Euro stocks are up. They were down yesterday. The Dow Jones is up 144 points, or 0.42, but we also have the cable up 0.27%. The cable's at 141.63. DAX up. S&P up 4.25 points, just over one rotation. So nothing to write home about. The bonds, the notes are down versus yesterday. The bonds are the weakest link here. Down 27 ticks, trading at 157.22. So overall, seeing a mixed bag and a neutral posture in a highly balanced area here across the Nasdaq, the S&P. We seem to have been making a run to the high since the 7:30 or 8:30 numbers, depending on where you are. And that's where that stands. The S&P's traded 185,000 contracts. Was short. The inventory was mainly short. Still is. It's about 80% short. Much of the volume overnight occurred below yesterday's close. That makes the inventory short. the profile's balanced. We're building a double distribution at this point. We've moved away from the 41.85 area, very important area from last week. That was last week's high, with a range of 22 points from 41.7775 to 41.9975. That's the S&P. Other than that, the market's paying attention to how the Republicans are going to vote or propose, counter-offer their trillion-dollar infrastructure plan to counter what the president has offered. And then, of course, as I said, at 9 o'clock, 10 o'clock Eastern, we have pending home sales. So that's what's up. Cryptos, Bitcoin pushed through 40,000 yesterday, still climbing higher. And looking at what was expected yesterday, the primary scenario yesterday is an open auction. An open auction that drops, was looking for a test of the 85 again, consolidation in the 85 area for a turn back up to target the 200. That's the primary scenario. A drop into 85, rotate back up, impulse back up, and push to 200. Okay, that was the plan for scenario 1. Here's what actually happened in our review segment. We'll cover it. Look at how little action there was yesterday. Just very small versus the day before, versus the day before that. Very tiny number of rotations based on a 4-tick Renko. Let's look more closely at what it did. We really have to zoom into this action. The volume yesterday was quite low at about 800,000 contracts. We saw the same kind of volume on Monday as well. Market opens, tests 94.75 immediately, and then drops into 88, pulls back to 93, drops to 81, pulls back to 86.50. Now remember, we were looking for a push to 85 right here. 85, consolidate, and then we're looking for 200. So basically on point, but the market pushed through the 85 by a little bit more. A pretty decent entry earlier in the day, and relatively choppy later in the day. As you can see here, it's just going back and forth on itself. We have an extended zipper zone here with a test below. 2 tests below. It's just there were a lot of zippers yesterday, a market that is standing by mainly, but the overall objective of testing 85, consolidating, now again it pushed through by 4.5 points, and then pushing to 200 was pretty much done. Remember yesterday we talked about this, 200 all the way down into 80 is a crucial area, and once we get through, then we're looking for 70 as the next big test area, and that's essentially what we did yesterday. We tested the bulk of the volume in this highly accepted area. We've tested the extreme of it down into almost 79.25, and remember there's a high or a pivot point from a couple of weeks ago at 78.25, and we missed that 78.25 by 4 ticks on Tuesday, and then yesterday we put in another higher low, and we are likely to squeeze some shorts. Just squeeze those shorts. That's what things are shaping up to be this morning. So this is really important to see. Note the opening price right here, 41.9150, and the action above and below. Tiny action above, tiny action below, a fair amount of action below. Consolidation crosses the price, the opening price above, holds above, and finishes on top of the opening print. And the delta is the same. Tiny action above, below, consolidate, cross above, hold above, get back into it, consolidate, and finish basically at 0. So again, delta is moving, the volume delta is moving with price, right? Delta loves price right now. So this is a very stark contrast to what we saw in March and April and the beginning of May, where it seemed like the delta was migrating down. No matter what happened, delta was negative. So we're seeing some of that action, some of that hedging action, or whatever it was. Kind of dying down. Moving into what it has done in this morning's session. In fact, let me switch back just to avoid confusion. Let me switch back to a 30-minute from a PNF. Here's a 30-minute. What we have done is we basically opened up at the same price we closed at yesterday, and we tested lower, and then we sat and consolidated in this lower distribution all morning, and this is significant. We went back to 41.80. We poked through yesterday's low and pushed to 77.75. Remember, the 78 quarter high is still in play here. We pushed below and consolidated there all night, and basically held a lower distribution, built and held a lower distribution throughout the day. With a low volume node right up against yesterday's point of control. So the point of control right here from yesterday at about 41.90. Right here is the top of this consolidation, and 41.80 is the bottom of this consolidation, and we end up pushing through on the economic release. We had a flutter up, pullback, and now we're trending higher. So what this is saying is the market accepted these prices throughout the session, and now those prices, following the release of the economic figures, especially the fact that durable goods missed by a wide margin, durable goods orders missed by a wide margin, this is pushing prices away from acceptance, and so we're ending up in an upper distribution. This is important to link up. And by the way, the volume is pretty decent here, getting close to 200,000 coming into the session. So expecting the open to have a relatively decent amount of activity. Here's what we've done. Look at, just to get the big picture. Remember, we've got this W formation push down into 51, pull back to 78.25. Again, I want to remind you, if 78.25 was the pivot point resistance when we were below it, and now it's the pivot point support as we sit above it. This morning's low, overnight low, is just 2 ticks through that, and all we've done this week is we have built up this fat profile with a point of control at what is it, 95. Let me see, let's expand this a little bit. 41.95 on the dot. That's the point of control right here, 41.95. And so we've basically spent the entire week sitting here with a higher low, higher high on the weekly, really battling this 4,200 to 41.80 area. And that's where we are. So understanding that that's where we are, this gives us the boundary. So even though we're above 4,200, we know that 4,210 is the test extreme, and pretty much any push into 4,210 is an outside in trade. This is significant for you to note. It's anything above there is an outside in trade. Why? Because the profile is completely balanced, and we're testing the extremes of the profile. The current extremes, 4,200 to 41.80. This is basically all we've done this week so far. So we've been testing up and down with a small excess above the 4,200 here from Tuesday, but until it breaks 4210 and starts migrating higher, remember 4212 is the low volume node. Until it pushes through 4212 and is bid, then we are basically fading a test, to either side of the extremes, with a target. If it continues to break out at 42.32 quarter, and 42.38 is the all-time full session high. So the market has done nothing but push, pull, push, push, pull, push, pull, push, pull back, higher low. This is very significant. Higher low. We talked about this last week. Hey, we put in a higher low and finished at the high on Wednesday of last week. Push. Look for the break of 78. Break of 78 happens on Friday, and then we open up and we are above there. And so this is very likely the natural path is for it to continue higher. So we're really trading the living bejesus out of this area, here. And so don't get too overzealous. We are still stuck in this big high volume node zone, which can be broken down again into 4180 to 200, which is just a 20-point range for this week. So the reason I'm telling you all this information is not to read what's happening, but what has already happened and emphasize it. It's to tell you this is the narrative. This is the narrative. Yesterday was an inside day to the prior session. We put in a higher low yesterday, so we put in higher low, higher low, higher low. Don't care about the high. When we're one time framing up, we care that the low holds, because if an auction is trending up and it's a healthy trend up, the lows should be firm. The lows should continue to hold. Don't care if it makes a new high, because in an uptrend you have a push, consolidation, push, consolidation, push, consolidation. It doesn't mean just because it made a lower high doesn't mean the trend has ended. This is why we pay attention to the lows in an uptrend and the highs in a downtrend. And what we did yesterday is we coiled and we're opening above that. We opened above the inside bar of yesterday. So today, 42.10, very much threatened. 42.12, which was the high a couple of days ago, overnight, very much in play, very much threatened. And once it clears the 12, it has cleared the LVN, and now we're ready to go for that all-time high. Let me switch this profile into something a little tighter up here. So that's a little bit better picture. As we clear this 12 area, we're likely to push into 21, and then once we clear 21, 32 is on deck. That's the lay of the land. That is the narrative. This is the play going forward. Let's move on and look at what's expected for today. Just setting up the chart here. Okay, so what are we expecting for today? Today, we are opening away from the 95. So the 95 here is important. It's the point of control. It's the point of control for this region. 91 is also important. 85 is important. 80 is important. Like I didn't mention it enough during this broadcast today. 75 has been important for weeks. And then beneath there, 70. Okay, so I know they're going in 5-point increments, which coincides with the option strike prices, but these are the areas that the market has responded to. So 95 is important. The inventory has been negative most of the session, now quickly dissolving. The overnight inventory quickly dissolving as we push higher and form an upper distribution. But this morning as we open up, I'm expecting a continued squeeze into 42.06, potential try at 42.10. I'm looking for it to pull back into 4,200, again, 200 right here. 4,200, but ultimately I'm looking for it to push through the 42.12. So we're going to take out the 10, 12, push through the 42.12, this thin zone right here, and start making our way towards the 21. So we've got today and tomorrow to be able to do that. That's scenario one. Scenario one, quite bullish. Why? Because we have left that 80 to 85 area below us, the high volume node below us. We have pushed through the 4,200 and are opening higher. We're opening in a trend up. The market's overall weekly trend is higher. The daily one-time framing is up. All of it supports continuation. The path of least resistance is higher this morning. Secondary open auction pulls back to 200, dips into 95, and if it gets into 91, it is likely to consolidate here for much of the session. Low volume consolidation, looking for a higher low at the 91 area and a higher high before it starts to squeeze, and mainly a balancing session. That's scenario two. Scenario three is an open test drive down. Scenario three is an open test drive down. So we're looking for a high volume drive down, 95, 91, 85, and then we're back in balance. And this is actually telling us that the trend is still positive, but it's not ready yet. Okay, so tomorrow's the last day of May. So one of these is likely to take place here. We either hold the 85, the 80 to 200 range, which is 200 points deep, or most likely we are likely to squeeze into the low volume node up here, squeeze into the low volume node and take it to the other side. And if we do, the all-time high is now threatened. Okay, so that's where we stand. Good luck today. And by the way, the winners of the giveaway for the Trader Bite episode number 2000, we call it TB2000 giveaway. The winners of the TB2000 giveaway have been notified. If you're a winner and you didn't get an email, please check your spam. You've got information on how to claim your 3-month subscription to Edge Pro X. Free runner-ups have also been notified, and every other participant will receive an email today with a special offer from EdgeClear, the sponsor of this event, and of course the brokerage that I founded. If you're not an EdgeClear member, please take a moment, go to the site edgeclear.com and have a look at what's on offer. We are looking to make a difference to the online trader in providing lower cost tools, better services, dedicated personal broker, and a bunch of other stuff. Again, derivatives trading is not suitable for all investors, but we'd love to have you on board if you're looking for a broker. Good luck.